The holidays are upon us, and so is accounting and auditing. This is the Issues Watch podcast. Hello, and welcome to the Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing with Sobelco. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are my own and not necessarily those of NJCPA or Sobelco. Okay, so this week we're going to, this episode, we're going to handle really only two topics. First one is a FASB update. So the FASB had a meeting. This is not a repeat of previous content, but I just want to give you an update. You've heard me talk about this before, but hearing it again just keeps it in your mind. So they had a meeting and they discussed the changes for interim reporting requirements. Now people hear this and they start thinking, wait, I do a lot of interim reports. This focuses a lot on the SEC type of reporting. If you do work in that SEC world, if you don't just shut this off, because you have to have the 10 minutes of content for the nano credit, especially if I ask a question later on it. But in SEC reporting, in the interim reporting, it's condensed reporting. And the FASB is looking at expanding that condensed reporting. So if you do work in that world, either you're at a registrant, work for a registrant, or you handle them in a consulting or auditing capacity, you might want to look into what they're considering. Another area that you've heard Frank and myself talk about a lot is income tax disclosures. The FASB is looking into that. They want more disaggregated information on taxes paid, particularly as it relates to federal and state. They're looking at expanding the rate reconciliation. Now, if you don't work in the public spectrum, being public company or auditing public companies, you may not have been exposed to reporting where you have to disclose a rate reconciliation. That's a reconciliation of the statutory rate to the effective rate on the financial statements. Because you take the income tax expense and divide it by income before taxes, it's not always going to be 20% for C Corps for federal rate, and then you add New Jersey or whatever state you're into that. It's never really a perfect rate. And what they try and do is they came up years ago, there's a rate reconciliation disclosure. You'll see it in a lot of public company financials and in some private companies, but they're in public company financials where it reconciles the statutory rate to the effective rate. And they want to enhance that disclosure to look at state and local income tax, net of the federal tax effect, foreign tax effects, enacted effective new tax laws, and some other areas including like tax credits and valuation allowance. So if you're not familiar with it, you might want to look into it, or if you do work in that area, just again, check out what the changes they want to make. Okay, the bulk of my time is going to be spent on not an AICPA update, but interim audit procedures. I wanted to just kind of talk about that. I know it's already at the end of the year and pretty much interim's kind of past us, but you have a little bit of time left and you maybe not be starting your audits or your work immediately after the beginning of the year, and you want to kind of think about interim audit procedures. And those are procedures that you're performing before looking at the final numbers for year end. The importance of them, it actually it gives you a preliminary approach as to your audit approach based on initial risk assessment. And it allows you to then modify your audit procedures when you're ultimately doing your full substantive procedures on the year end numbers. What's supposed to happen is you're supposed to do a risk assessment, and if anything changes, you change your audit procedures. Well, this allows you to get in there, start looking at some information, and alter your audit procedures when you're doing the full substantive procedures on year-end numbers. Then it gives you a little bit more clarity. The problem with those that are in industry, and I'm not just talking to those that are in public, the problem with those that are in industry is they never want us out there in the interim. They never want to talk to us in the interim. Their comment is, I only want to have to deal with you once. Well, it's not effective that way, and what the problem is it puts a lot of work into one time. Now, interim procedures, I will tell you right off the bat, do not save time. Okay, so don't listen to this and go, hey, I heard a podcast today, bring it to your office. Brad said this and it's going to save us time. It is not going to save you time, and sometimes it increases the time a little bit because you're putting something down and picking it back up. But what it does is if you can take 2 or 3 days and put it into the interim on this job, on this job, this job, this job, it takes 2 or 3 days out of busy season and puts it into another period and allows you to get some other work done and expand the other work during busy season. That's the big issue for those that are in public, is it's taking some work out of the busy season. What it will also do is avoid the compression and possibly enhance audit quality. When you're stressed and you're trying to get stuff done, you're working until 12 o'clock at midnight, or you're working later and you're just, you're overloaded. Doing this will help spread things out a little bit and enhance some audit quality, which of course the AICPA is always looking into. Interim audit procedures is discussed in AUC-300, which is really part of the planning stage, but it does discuss interim audit procedures. So if you're interested in it, go look into that. The areas that you should consider when you're doing interim audit procedures, and these are just some areas to consider. You can pick up some others, but these are some that either you should be doing, but also some that you could do. So those that you should be doing is you want to do some preliminary analytics. Don't get the 1231 numbers, compare this year, last year, and say that's how I'm doing preliminary analytics, and you do it on the first day of your audit. You really want to take preliminary information, annualize the numbers for the P&L where possible, or where you should do, annualize the numbers, and do some just preliminary work based on that. Now, if you're working with a company that really trends towards the end of the year, maybe some of the interim information might not be as appropriate, but trust me, looking at 930, 1031 numbers is very helpful in doing your preliminary analytics. You should start understanding the entity and its control environment. I'm going to talk about the control environment a little bit more later on, especially fraud risk considerations, the interviews. We really hate when we see the fraud interviews are done during or at the end of the audit. That's supposed to be a planning stage. It helps you assess the risk. And then you have substantive areas that you should consider. Revenue testing, you can do 9-10 months worth beforehand. Certain expense testing, such as legal and professional, repair and maintenance, fixed asset additions, you can test up to a certain point. But remember, all this testing that I mentioned also depends on your risk of material misstatement. Don't test repair and maintenance just because Brad said test repair and maintenance. If that's not part of your risk of material misstatement, don't test it. Focus on your areas of deemed risk of material misstatement. Also affords you the initial evaluation of going concern considerations, which has to be done by management, and you have to review it. And it also will help you identify issues that will become significant during the audit. One of my managers found that our client did a conversion of debt to equity, not convertible debt, but conversion of debt to equity, and then we found that they were issuing profits interest. Go back to other episodes where I talk about profits interest. They had a valuation done, and we got a chance to look at the valuation now, and we found out it was a bad evaluation. So the good thing is we're focusing on it now, and we're not focusing on it in February when we're in the middle of trying to get our broker-dealer audits out, or this other information, these other audits done, or tax returns started. We're getting an opportunity to focus on it now. So it really lets you talk to the companies about the important issues now, rather than waiting until the middle of the audit or as you're trying to issue the financial statements. One caution, remember that you're supposed to update your procedures. So if you look at revenue through 1031, 930, 831, or whatever, you do have to update those procedures. And that's where some of the time you can think expands a little bit. Understanding the entity. Let's talk about this real quick. Too often the documentation for understanding the entity is just nice stories that people just write a narrative of what they do in the accounting department. What you're supposed to be doing is you're supposed to be focusing on significant areas. When we do peer reviews, we see that people have a narrative on petty cash, and that's not a significant area. You should be focusing on significant areas, and most importantly, you should be focusing on key controls. Key controls are those controls which, if not in place, there's really no possibility for something to be caught, okay? I gave you a real summary there, but if you look at internal control seminars and risk assessment seminars that Frank and I have done in the past, we talk about key controls a lot. The big area that auditors continually overlook, and we don't consider it a lot of times because we don't understand it, is considering the IT environment and cybersecurity. The Center for Audit Quality in 2020 put out a report on auditors' responsibility for cybersecurity, and I won't read to you the full context. It was a 15-page document, but they had one paragraph that was really good, and I'm tight on time, so I won't read it. They just say that the auditor should continue to evaluate the potential for cybersecurity incidents and the material impact on the financial statements. But it starts with understanding the IT environment. Always keep that in mind. Okay, and now what I recommend is if you don't have a good ability to get and understand the IT environment, partner up with somebody. Bring somebody in from the outside that can come in and do those questionnaires, interview the clients, and talk with them about their IT environment. If you have me do it, I'm going to go to them and say, where's the button to turn it on? Oh, there it is. Okay, IT is working. You want to have somebody go through the IT environment checklist. I know the practice aids have them. And ask the proper questions and really be able to pick up on things. I honestly feel that what management wants to hear from us as auditors sometimes are some comments on that, because a lot of times management doesn't understand it either. So bring somebody in, if you don't have them in-house, just partner up with them, contract with them, and have them do this work. Okay? Get the competencies someplace else if you don't have them itself. It's what the AICPA is looking for. And remember, SAS 145, it's not this year, it's next year, but that's where they're going to be changing the whole risk assessment process around. So start thinking about it now. Okay, in closing, I'd like to let you know about some upcoming NJCPA events. On December 20th, there's an 8-hour webinar on performing single audits under the Uniform Guidance for Federal Awards. On December 21st, there's an 8-hour webinar, Latest Developments on Nonprofit Accounting and Auditing. And for those looking for in-person CPE, the Mercer chapter is holding an A&A update on January 12th in Princeton. Register for these events and more at njcpa.org/events. And be sure to join the NJCPA Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups.